All right, so I thought I'd just do a sort of separate standalone video on gold, just because I think potentially what we could be sort of seeing here at the moment is a medium-term top for the metal. There's a couple of factors here. So look, I'll start off on the weekly time frame, and then sort of we can work our way down. But basically, what we're potentially sort of seeing here at the moment is a failed breakout. Look, it's not fully confirmed yet. Closing back inside this range here, probably back down towards these sort of supports, and obviously under the support would be even better. But that sort of 32.80 level, I think the underneath here is going to be where you're going to see your sort of confirmation of this being actually a fully failed breakout. Because at the moment you're in two camps. Yes, technically you're kind of back test, so you could still be moving up. I mean, here's your range effectively. Buyers have sort of stepped up their push. They've tried to take it out the top, equally met with sellers, and they're pushing it back down in there. So the first initial sort of move that sort of got it really sort of rallying out the top over here was the latest sort of developments with Israel and Iran. And that sort of got it to move up here. And that's fine. That's what people expect. They're like, oh, it's like an age-old sort of adage of sort of like, oh, wartime, yes, you go to gold. And yeah, that is sort of like true, partially true. It does have historical sort of relevance. It has, we have seen that in the past, but I think it's a little bit different this time, just in the fact that we've seen gold on such a massive run. I unpacked this the other day on one of the sort of daily videos I did, but just a quick sort of recap of it was that we've seen this big mammoth run up to 3,500 off the back of the tariffs. Pull back, second high, that's fine. Came in with a lower high. Excuse me. We could see that they were starting to sell it around this year. This was before any of the sort of war stuff had been mentioned. Came back down here around that sort of like 3160 was where we were sort of targeting, which was a confluence of a number of things. That was the sort of the 38% retracement of the year to date. It was also the 61% retracement of this move through here. So as you can see, at 3160 is where we were looking, which just comes in line here, top side of this channel. And then if we looked at sort of the yearly, it was around this zone here as well. So there was certainly a bit of a confluence where that's December. So update that, that's January. And as you can see, there's quite a strong sort of confluence here and why we were sort of targeting 3160. Because as I said, Fibonacci over the whole year, Fibonacci over the last move, top side of the original channel. So look, we sort of come back in that. So that's fine. That was back then. We're talking about now. The point that I'm saying with this though is, okay, we've had the rally attempt. They were selling it down. They were taking profit at this point over here prior to the war stuff happening. It moved up over here. This looked like a third top, obviously lower high in that. And then we had the attacks last week. And that gave some sort of justification to move the price up. And we saw that. But if that was truly the case, you would see this thing continue like we had seen off the tariffs. Now we've got, because the tariffs haven't gone away, so effectively that motivator, that driver to get it up over here is still there. Then you add on top of that war, and if the age-old sort of adage of sort of like, war is happening, we go to gold, well, you should be buying gold then as well. So then you've got two catalysts which really could put it up to 36, 3,700 or so. I mean, in theory, that would make sense, but they're not doing that. And the more headlines that come out, the more bombs that get dropped, you're not seeing the market respond and take this higher. In fact, they've actually been selling back into it. So it's in a very sort of precarious position at the moment, in that it sort of basically it's tried to break out. And remember, this is a weekly time frame. So the resulting moves are generally sort of in proportion to the time frame that you're on. I sort of, if you get a failed breakout on a weekly, it's not going to turn around on Wednesday next week. Obviously, we've got this little confirmation line here, but most likely you could see a failed breakout, and a failed breakout is as good as a breakout. A failed breakout is basically just an indicator you're going the other direction. So a measured move on this kind of thing would be, here's your range. So you would have kind of expected this as a measured move to break out and then run up to 3,500, 3,520 or so. Obviously, it hasn't got there. They're selling into it. So you apply that same measured move to the bottom side, which gives us our price target down here, which just happens to be pretty much perfectly in line where we've seen a bit of a support level around that sort of 30, 40, 30, 37 kind of level down here. That's a near 10% drop off from where we are right now, which seems like a lot, but given how much gold has been moving recently and that, it's not actually as crazy as you think. Because if you look at this move coming back over here, this drop down here gave us a 10% pullback. So it has been known to do these major pullbacks, and not even to get to the point of sort of going to some of these kind of moves here, where we're seeing big sort of blow off tops and then deeper sort of corrections. Other previous times that it's sort of gone through 2000 level and the 1000 level, even obviously way before I was trading, but still at that point. So the point is that even in most recent times, we saw a 10% drop off here. So to see 9% from here, yes, you could say the argument that it's actually from there, which would make it a 12% drop off, but we're trading and going with the expectation of from where it is currently as we do the analysis. So a near 10% drop off would give you your measured move back down to 30, 40, and really end of the day, it just brings it back into this main channel. And this is the main channel it's been running in since back down in February 24. So it's been on a big blow off, big sort of run up here. It's been respecting this channel a lot. I mean, there's a lot of other little directions that it's gone. So it's obviously sort of gone off on steeper sort of tangents. This is another way that you could probably sort of say, hey, look, there's a confluence for this bounce thing here. So look, 3060 is where I was looking now. I wasn't looking for this point here. So I just drew that line in there. But the point is, it's gone off on the steeper tangent. A bit of a sort of self-correction to bring it back into this channel is still healthy. It doesn't mean that you've got permanent top and you're coming back down to 2500 or anything, but it does mean that there is some room to sort of cool off. And the failed breakout, as I said, is typically as good as a breakout should this then come back down here. And about mid-range of this, you can see your supports it here at 20. Look, honestly, 2880 I think would be the better one, but a deeper close back inside this range would be a higher sort of confirmation that we could potentially see that momentum carry and push it out the bottom side. Now, this is on the weekly time frame. If we get down onto something a little bit more probably manageable, which chart were we using this on here? It's a problem with so many charts. I will find it. No, I've actually sort of kept my charts proper this time. So this is all obviously on your weekly time frame. But if we get down onto something a bit more manageable here, and let's say we work on a daily time frame, we can go through here. No, and this is the chart that we're looking for. So this is on your daily time frame here. So what makes me sort of think, as I said, just to recap that lot there, is they were selling it down here off general price action. This was after tariffs, yada yada. Came up here, second top, boom. Okay, lower high. Coming back down here, that's fine. So we know that they're keen to sort of sell and take profit at these levels anyway. This little latest thing with the war going on pushed it back up here, just to a level exactly where they were taking profits prior to any of this. So basically, if you've sort of taken profit here, you've taken profit here, and you've been long from way down here, and you get another shot to take profit up here, well, you're going to take it, in my opinion. So this is why, sort of, despite the sort of war and all these sort of things happening, the people that are taking profit are just taking profit up here. And if they were selling it up here and they were selling it up here, and you know what, they've got another chance to sell it up here, they may not get another chance in the medium term. So this could be the driver to push this thing down a little bit further. Now, obviously that was a weekly time frame, so you got to take that sort of with the idea that that's going to be coming not next week, but in the short term, you've got a couple of indicators to say that this thing could be turning around as well. So we've got this 3 drive up the top over here, as you can see, starting to sort of push back down to this nice solid line. So with gold, one of the big sort of things that you've seen with tops is when it has a nice solid line. So basically people go up here, yep, it's going higher, yep, it's going higher. You put your stops under here, put your stops under here. It builds up, builds up, builds up. Should you take out this level down here, so get a close underneath sort of, this 3270, 3280 level that I was just mentioning. So if we get a push back down to here, This is pretty much pushing that this daily setup here is most likely going to be coming back down to 31.40. You've got a rising wedge, which is a reversal. Each high is just going a little bit higher, but not quite as much to make it a channel. You had a negative divergence on this last push up through here. This is where we had the Israel situation kick off. So you're through the wedge. You've got a negative divergence. You've got a 3 drive. Your first target's 32.80. We've got 18 hours left to move down towards this level here. And so if a daily time frame can complete this and close the week, because we're on the Friday now, if we can close the week out here, what is it, the 20th of June? If we can close the week out down here, and then you go back to your weekly time frame, you see that that's really close back down inside that range. Should we get back to sort of 32.80s, 32.90s? So it's just a matter of using a couple of different time frames, preferably on one chart if you can do it, but I haven't. A couple of different time frames to see a completion on this move 3 drive here back to a support level. It doesn't have to break this today, but should we get it to close down towards this level here, which at the moment it's through this rising support with the wedge, is a possibility. That could open the door up to a failed breakout on the weekly time frame, which could see a continuation move down to these levels here. And this is, of course, that wick that we saw where we had the confluence of everybody jumping in at that 31.60. And should that break, that's when you get your move back down to 30.30, so down over here. So it's a matter of using a couple of different time frames and basically just sort of reading into what kind of price action they're sort of doing at the moment. Another thing, lastly, just that this could actually sort of crack down a little bit more. We're seeing a potential major breakout on US dollar and also on oil. Actually, oil is probably more the one that we should be sort of focusing on because of this whole situation. Gold's not responding. Oil is responding. Oil's been at an incredibly weak period for quite a while now. So if we look at oil here, oil's back testing its major falling resistance. This support level through here has been very strong for a long time. Like we're going way, way back here. Put this on the weekly and you can see that this sort of 65 zone has been a big pivot point and it's been very strong all the way through here. Came down here, little head and shoulders, and now it's popped back up. Think about how many people got short under here thinking this is a big support, it's rejected down. And they were sort of calling for 42s, these kind of things. Where this is applicable for gold is the idea that if they're short here and this starts to move up, they're getting squeezed out of these positions. They're going to have to cover these positions somehow. How would they cover it? Well, you liquidate positions that are in profit. So if you've got a lot of profit sitting on the table in gold, and you've got to sort of like cover your losses or your squeeze or this kind of stuff for your shorts on your silver, and I'm not talking the Joe Blow trader, I'm talking about the big people who just got the money to move markets. They're going to have to sort of get that money from somewhere to cover the losses because a lot of these people were short and they were calling 40s. And look, from a technical standpoint, it makes sense. But if this continues to squeeze up here, we're going to see a lot of that capital sort of flow from profits in gold. Gold will continue to move down so they can fund this move going up in oil. Similar with DXY. It's been incredibly short for a long time. If this thing starts to move up through here, people are going to peel off their shorts. Why? Because their shorts are in profit. Their shorts are in profit and they have to sort of cover those other sort of potential positions. And while that happens, where do you get the money from? You get the money from gold. Because that's of these 3 assets, US dollar, oil, and gold, gold's right at the top. People are sitting in a lot of profit. why wouldn't you get into something that's actually sort of potentially breaking out from its lows, opposed to something that's running out of puff at its highs? All right, that's it from me.